Howdy everybody, welcome back to Accounting 1101, Principles of Financial Accounting. I'm Professor Martin, and we're here again to add yet another layer onto that good accounting foundation that we've been learning over the past few videos. In our video today, we're going to talk about posting transactions to ledger accounts. And we've already talked about how transactions fit into the accounting equation. We showed you how to journalize transactions. Now we're going to show you how to take the transactions out of the journal and get them into individual ledger accounts. Speaking of journals, you may remember what the journal looks like from our last video. We have a basic journal format where we write out the transactions. We have the date, the account, posting reference, which we'll get to in a little bit, and we have the debit and the credit. And in our last video, we walked through, 6, 7 transactions where we wrote out the transaction in the journal and kind of showed you how the transaction impacted the individual account. That was called journalizing. Now, we're going to take it one step further, and we're going to post everything that we wrote up in our last video. So just to remind you kind of what it looked like. Here's a transaction from the set that we worked in our last video. Net Solutions bought supplies for $1,350 and agreed to pay the vendor later on. And we said that's an accounts payable, and so we recorded a debit to the supplies account, which makes supplies go up. We recorded a credit to accounts payable, which makes accounts payable go up. Debits and credits have to be equal. So in our video today, we're going to talk about how to take that transaction from our journal and post it to the ledger account, supplies and accounts payable. That process of posting helps us keep track of what's going on. So every transaction is going to start in the journal and get copied over to the ledger. Here's our ledger account. I'm going to kind of show you the format we're going to be using. It's a glorified T account. In our last video, we plugged everything into T accounts. It's still a T account. You can see our supplies account ledger right here. We have a T account for debit and credit. We're adding to it. We have a date, a posting reference, which is a reference to the journal page it came from, page number 1 in this case. Whatever the debit was, whatever the credit was. And then we have a running balance that we're kind of keeping track of for the account. That way we always know what's in the account. We can just look at it real quick. Bam, we know exactly what's in the account. So I'm going to show you how to take our transactions from here and put them into the individual ledger account. So here we go. I've got an Excel spreadsheet set up. We're going to work through it. I encourage you to download the spreadsheet. It's linked up in Canvas, and we can kind of pull that up right here. That spreadsheet is going to look like what you're looking at right now. The title of our Excel workbook is called Posting Entries Example. Download that. You can work right alongside of me. You can see on tab number 1, we have a recreation of the journal where we wrote everything out in the last video. I basically just copied it into an Excel spreadsheet. Every transaction we did in the last video just copied there. If you don't remember how we did the transactions, take a look at our last video. You'll pick up on it pretty quick. The other tabs I have are the ledger accounts. You can see I've got a tab for the asset accounts, cash, supplies, and land. I've got a tab for the liability accounts and the equity account. And then finally, I've got a tab for the revenue account and our expense account. And you can see the exact same format that I showed you from the PowerPoint notes. I have the account title, the account number, the date of the entry, posting reference, debit and credit, and then a running balance. I'll show you how to keep track of all that in our video right now. The item part, we'll come back to that later on when we start getting into adjusting entries and closing entries. That's where we'll fill that out. So what we're going to do, we're going to take every entry that we made and post it to the individual ledger accounts. Every single account is a ledger account. All the ledger accounts put together are referred to as a general ledger. All right, we have a general journal. We have general ledger. Journal, ledger. Journal keeps track of transactions by date. Ledger keeps track of what's in every individual account. All right, you with me? Let's do it. Starting off right here, entry number 1. We have a debit to the cash account and a credit to the capital account for $25,000. Now, when we post our entries, we're copying them over exactly as they're written. We don't reverse them. We don't flip them. We don't leave anything off. We don't change any of the numbers. We're just copying. I tell you, if you can't do this, just copying. We should be pretty good at copying, right? Not that you've ever copied any of your schoolwork or anything like that. I didn't mean that. I'm just saying, copying's pretty easy. Make this no problem. So we have a debit to the cash account on 11/1. I'm going to take that and I'm going to copy it over to the cash ledger account. The date, November 1. I'm going to leave item blank because it's just a regular transaction. When we start doing adjusting entries and closing entries, like I said, we'll fill that in then. Page 1 of the journal is where that came from. And my debit, again, $25,000. I'm not flipping it, not reversing it. $25,000. And put that little comma. Make it look nice and neat. There we go. That's our first entry into the cash account. So after that entry, we have $25,000 balance on the debit side in the cash account. So I've posted that side of the transaction to account number 11, the cash account. So I'm going to go back and I'm going to put 11 in there. That tells me, as I'm looking at the journal, hey, I've posted it. I don't need to worry about it now. I've got it posted. We're good to go. The other side of the entry is a credit to capital for $25,000. November 1, page number 1 from the journal, credit to $25,000. We have a running balance of $25,000 in there right now. I've posted it. So now I can go back. That's account number 31. And I can plug in 31. The account has been updated. Both those accounts have been updated and through that posting. Okay, so my transaction begins in the journal. Once I journalize it, I post it over to the individual accounts. Now, we're doing it manually to show you how it works. In real life, usually you don't do it manually. Once you make your transaction, you hit a button, boom, and it posts automatically. And the computer puts it where it needs to go. And so we don't really think about it a whole lot, the posting part in real world accounting, because the computer's doing the posting for you. We know that once we make the correct transaction and we enter the transaction into the journal, the posting part happens automatically. But you need to know how it works, which is why I'm showing you manually. All right, how about transaction number 2? We have a debit to land on 11/5, $20,000. Go down to my land account, 11/5, debit of $20,000, and now we have $20,000 in the land account for my balance. I'll go back to my journal. What was the land account? I forgot the number. Number 17, account 17. I posted it to account 17. We're good to go. The other side, cash, $20,000 credit. November 5th, $20,000 credit. Now, we got to do a little math here. I promised you not a whole lot of math. Got to do some every now and then. We began with $25,000 in the cash account where we put $25,000 in. We just spent $20,000. You can do it, right? 25,000 minus 20,000. You probably don't even need a calculator. What number are we looking for there? 25,000 minus 20 gives me 5,000. Okay? You see that? I began with 25,000 debit balance. I just took out 20. So I'm down to 5,000. Our balance columns are keeping a running tabulation of how much is in the account. So as a good accountant, if your boss calls you on November 7th and says, hey, how much is in the cash account? You can say, oh, I know that. I can look right here. It's $5,000. You don't have to go back through the journal and say, oh, okay, well, we had cash here, and you don't have to do all that. That's why we keep a running tab in a ledger account. It gives us the balance just like that. So there we go, 5,000. I can go ahead and post it. That I did. Did that. We're good. Moving along, we bought supplies on 11/10, 1,350. Find my supply account, 11/10, 1,350. There we go. Posted to account number 14. We paid for it not with money, but with an IOU, accounts payable. We'll pay them later on. Here's my accounts payable, 1110. On the credit side, 1,350. Again, I copy it exactly like we've written it out. I don't flip it. I don't reverse it. I posted it to account number 21, which is accounts payable. I can put that in my posting reference. We're looking pretty good here. All right, now let's continue on. 1118, we completed a job for a client. We got $7,500 for doing so in cash. You can see the debit there and the credit. So 1118, we're going to increase our cash account by $7,500. Cash account, 1118, $7,500. Time for a little bit more math. We had a balance of $5,000. We had a debit to the cash account of $7,500, so we're going to add that in, $12,500. Right on. Everybody kind of see what's happening there? Keeping a running balance of every account, every transaction, updating our balance. If we ended up with a credit here, that would be bad, wouldn't it? And our balance, that would mean that we were overdrawn. We'd expect our balances to appear on the normal balance side. This side the account goes up on. Remember, we've talked about that in a previous video. All right, so what was the other side of that transaction? We posted that to account 11, fees earned. We need a credit in the fees earned account. 1118, revenue account. Fees earned, $7,500. That's account 41. Go back here, post it. All righty, a couple more and we'll be good. We had on 1130 a big entry where we paid all the expenses that we had going on for the month. We paid the wages, we paid utilities, we paid rent, had some miscellaneous expenses we paid. All told, we paid $3,650. So one by one, I'm going to post all that entry. Wages expense, $2,125. There's my wages expense. Oh, I've already forgotten the number. I tried not to. $2,125. There we go. Okay, so again, I'm plugging in the transaction and then updating the running balance. Next up, we had, what number was that? That was account number 51. Wages expense, 51. Next up, we have rent expense, $800. Same date. My rent expense right there, 1130. $800. Account number 53. Once I got it posted, I can come back and tell the journal, hey, I posted it. It's in account number 53. You can go find it. Utilities expense, $450. Here's my utilities expense right there. And that's account number 54. And again, you wonder, what am I putting number 1 in for posting reference on the ledger account? Remember, that refers back to the journal, what page of the journal it came from. So 54, utilities expense, that's our account number. We've got it posted. Miscellaneous is $275. 1130. $275. Account number 59. There we have it. Our cash credit, $3,650. We'll find our cash account. 1130. Credit $3,650. Now again, you might be tempted to throw a number here on the credit side. Maybe you just want to copy that number over. That's not what we're doing. We have a $12,500 balance in cash. We just spent $3,650. So our new balance is what we started with minus what we spent. $12,500 minus $3,650. No need to be a hero. I can't do that math in my head. I'll subtract it out using Excel. We have $8,850 in the cash account now. So I'll come back here, hit the wrong button because why not? And I'll make sure I get the entry posted. Posting reference right there, 11, tells me that I've posted it to the ledger. Moving right along, 3 more to go. Accounts payable, $950 on the debit side. Cash credit, $950. So accounts payable, we have a debit on 11/30 of $950. Again, don't get tempted to start just plugging numbers in randomly in the balance. Even though we put a debit in here doesn't mean there's a debit balance, right? We started with $1350. That's where we're starting, and we're subtracting out $950. So now we have $400 left on that accounts payable that we owe. Posted that. Cash goes down $950. And again, I'm going to subtract. I have $8,850 that I began with. I'm subtracting out $950, and I end up with $7,900. So that side's posted. We're done with that entry. Moving down to the next one on 11/30, we made an adjusting entry for supplies expense. We used up $800 worth of supplies. So I'm going to go ahead, find my supplies expense account here in the expenses ledger. And we're going to say 11/30. And we're going to put in, was it 800? Yeah, 800. So there we go. And then you can be following along. You can have your spreadsheet downloaded and work right along with me. Make it happen together here. Bring that back. Supplies expense was account 52. And we need to bring down the supplies asset account. $800 credit. $1,350 minus $800 gives me $550. Again, $1,350 debit balance. There's a credit entry, so I subtract it. On these balances, the balance, the running balance, should always be on the normal side, the positive side. There'll be freak circumstances where maybe it won't be, but for the most part, we're going to be on that normal balance side with our running balance. All right, supplies was what? 14, account number 14. So we posted that one. One more entry. We have a draw. The owner took out $2,000. We need to put that in under equity. Chris Clark drawing, $2,000. That's account number 32. And then finally, our cash account goes down $2,000. Account number 11. Coming down $2,000. And our new balance, $5,900. $7,900 minus $2,000 gives me $5,900. That dude is posted. There we go. So, on the journal, we write out the entry. That's where the transaction begins. I write it out in the journal. I input it in the computer in the journal, whatever we're doing. And that's where it begins. Then I take the transaction exactly as it is made and post it over to the ledger account. When I've posted it, I put the posting reference, what account number it went to. That tells me that the entry has been posted. The purpose of our ledger account is to keep a running tab of all that has gone into the account. I can look at the ledger, I can see the date, I can see the journal it came from, the page number of the journal, and I can see what happened, if it was a debit or if it was a credit. All right, and I can see the running balance. Very important information. If I didn't have a ledger account to keep track of things, if I wanted to know the cash account balance, I'd have to go to the journal and say, okay, I started with 25, I subtracted out 20, I added 7,500, took out 3,650, I took out another 950, I took out another 2. You see how cumbersome that would be? And we only got 7 or 8 transactions. Imagine if you had 50,000 cash transactions and you had to go through a journal and pick out every cash entry. It would take forever. Too long. Can't do it that way. So we have a journal, the purpose of which is simply to record the transactions. If I want information on a single transaction, the date it happened, the accounts involved, I'd go look at the journal. if I wanted to see a running tally of what's in an account and the ending balance, I'd go to the ledger account. All right? Kind of keeping track of the same things, but we're looking at two different pieces of information, both of which are super important and have to be kind of compiled. Compiled's a good word for that. So that's where we're at right now. Where are we going from here? Next up, we're going to talk about how to calculate ending balances in all those ledger accounts and what we do when we have those ending balances. Before we get to that point, I'm going to do one more review with you. We're going to go through a whole month of transactions. We're going to write out the transactions and practice that. We're going to post our transactions to the accounts for the month of December. We've done November. Let's do December. We'll come back in our next video and do that, and then we'll talk about compiling and calculating those ending balances. Still a lot to talk about. Never a shortage of items to cover in accounting, which keeps me employed. Very thankful for it. Hey, speaking of keeping me employed, if you have questions, why don't you reach out and give me something to do so I can keep my job here, right? I'd be happy to help. If you do have any questions on your homework, anything that you might be working on, reach out to me and we will take care of it together. Until next time, take care, everybody.